Welcome to Trading Lounge and the European indices for the 26th of November. Just a short note is that our servers will be back online later today and tomorrow. We need to update things, and we still need to get our email server working as well. So, but just to let you know that things are on track. So, all good. We'll still continue to post to the TradingLoungeroom.com today, and then that will change once the DNS server names change back to TradingLounge.com. So with the DAX here on the daily chart, we know that we've got a corrective move here. So in due course, we're going to see the move at market move higher. I've just got a few problems in this little area through here. We have some long trades on, so we'll need to look at how we can protect those. We've still got this situation here where we've got a possible wave 3 here, 4 here, and 5 here for wave 1 coming into play, and then wave 2 coming back down through here. And it puts a little bit more pressure on that particular count because of what's happening with the Footsie being so weak. So we'll be looking at that. So our main focus is back in here. So let's go in and have a little look at both of these counts. On the 4-hour chart, let me just get this a bit clear here. We were looking at it like this here. So if I can just remove that there, because in a nutshell, in the 15-minute chart, we were looking at this here in a wave 4 triangle pattern coming into play here for this, and then looking for 5 waves. So even if that is 5 waves, I'm still looking for one more little move up here before we see this A wave, B wave, and C wave down into this space here. It's possible, and we just need to be aware of it, because if it starts unfolding, then we'll need to adjust that height there to that thing. But that's the general sort of picture for that. And if I just go to the, well, I'll just go have a look at the other count now. So from the 1-hour chart, looking at it, this is in line with the Nasdaq, this particular pattern here, with wave 1 already in place here, with an A and a B and a C wave here, and then wave 1 and wave 2 here, and then wave 1 and 2 here, and then continuing to build to the upside. So getting a nice support on top of group 1 here is always very helpful. So 13,000 is a major level, then 1, 2, and 3 are minor levels, but I'll call them group 1. And getting support on top of group 1 here, on top of the 300, normally severs the pull of orders coming back to the closest largest number, in this case 13,000. And then the psychology is folks look to the upside at 500. So 1, 2, 3, support on 3 takes us to 5, support on 5 takes us to 8. So they're just the Fibonacci numbers as a price ratio there, called trading levels. So yeah, this is the more bullish count. But in both cases, in this wave 1 scenario here, this is the alternative count. I still think there's, I mean, this is a bit dodgy to count in here, I have to say, but the best that I can figure out is that we still have one more new high to make here, and this is where this is either where we're going to get a corrective move and then push up. So what we can do in this, or come down from this point. So one of the things that we can do here, this is where group 1, every single number is really important and plays a part, and you just got to get to know it. So in a bullish market like this here, when we get especially in this case topping out here, I would turn bearish in this if the number 2 here became the retested resistance here. That's what I look for. And you just got to be a little bit careful that you just don't get a spike down and then a push back up in that case, because it can quite comfortably come down to 2.13, I would say 15 here, or So it can come down to that level. That's the strongest number between the 100 and the 200. So it can spike down to that level and then move up from that point. So it's a little bit tricky, but if you keep your eye on it, it's something that that you'll learn over time through your own experience of watching it. So if we expect this to be getting a top in here and then moving down, if this becomes the retested resistance, then we'll be pulled down to 13. If we're being pulled down to 13, then we're likely to come down into group 2 here, 65, 72 and 80 here. So that's that. So the long trades that we have in the market at the moment, I just want to talk about those. I just need to bring a bit more data in here. So this has been looking at it as the triangle pattern, as the A, B, C, D and E wave here. Now the E wave can be here or here for that, but it just makes this quite difficult to count in this space here. Based on the S&P 500 though, we're looking at a wave 3 here and a wave 4. So I think it's sort of safe to go in that space on that one there. So yeah, even the Australian market, which I've tracked, is on that wave 4 there. So this particular move coming down here looks like 1, 2, 3, 4 and 5 here. Okay, so impulse, corrective move, an impulse move here. So we've got an A and a B and a C wave here. So this can move up from that point. I mean, of course, wave 4 can get a bit more larger as well, like an A wave, a B wave and a C wave down here. And if that's the case, one of the points that would need to be monitoring would be the 50-60% retracement level where it is now. So we can see right here that it's actually struggling here for that. So what you could do is you could say that, well, if this market finds that, well, see where all those open and closes are through here? That's the thing to look for. That's the price point to look for. So that 13,308, somewhere in there. If that becomes the support, then you know that you're going to make a new high above here. But until that, if you're looking to go long, then all those little open and closes through there, they're the ones that you want to be watching. In the meantime, we've got a trade on here and here and here for that. So I think that we need to bring the stop up to protect things. And that means that we could probably get it a bit closer. We've got this last trade here to get it closer to here, but it's just a little bit sort of too close. So if that's 1 and 2 here, then this is going to be some sort of 1 and 2. So we really want to keep it out of the way of that. There's enough profit in these ones over here, give us a little bit of profit. If we're lucky enough, right, and the market moves up into the 13.4 or just before it, then take profit there at that, and then we'll reassess what's going to happen at that point. So protection and further profit at that point, that's the best I can figure it working this here, because if we're going to be coming down, we're going to be coming down in this, you know, this A, B and C wave coming down through here for that. I somehow don't think it's the case. You know, when I look at the Australian market, it's got further to move up and everything's going fine, but yeah, you never know. So bit of housework. We're going to have a look at the Footsie now. We can see how bearish that's become. So it's dropped quite deeply through here. Yes, it is. So I was thinking that having wave 1 here, because it's difficult to count 5 waves up to this point, and it's difficult to get 5 waves in here, and this has pulled back at least 61.8% of this structure here at least. So it could be wave 1 here and ABC for wave 2 here, and then move up from that point. That's possible. But otherwise, we'd need to look at it as 3, 4 and 5 coming in here for this C wave here for that. So probably wouldn't hurt to have a short under that area there if you're inclined to do that. You know, can I put wave 1 over here for that? I don't know. I can already count 5 waves up here, so it's a slightly different situation here. Let's go to the 15-minute chart. See, I'm thinking here we've got 1 here and 2 here and 3 down to here and 4 to here and 5 here. So we're looking for some sort of rally here. If it moves above at 61.8%, well then we can look at it being bullish at that point. That's about the best I can do with this. So it would need to find support on top of that to be bullish. I mean, it's hard to get 5 waves out of this. If this is the low over here or here, you know, this counts okay as an A wave, A, B, C for the B wave, and then 5 waves up here. So we had long trades in here, but we've been stopped out, of course. It's a bit tough, but that's it. So yeah, I don't know if this is like copy this wave 1 here and wave 2 here, or we get some sort of rally into here and then down for 3, 4 and 5 coming into this space. That's what I don't know. But shorting it under this low here would be, well, if you're looking for a trade, that's it. Nice clean break of that, because basically if that gets taken out here, what's happening is it's rejecting the closest largest number, which is the 6,400 in that case. So I'm a little bit unsure about the Footsie, but it does appear, just putting it back on the hourly chart for a better visual on this, it's difficult to count this up here in 5 waves, having this as wave 1 and 2 here and 3 here and 4 here and then 5 up here. Possible, but it just doesn't look right. It's just this is overlapping wave 1s in here. If we can call all of this wave 1 here, an A and a B and a C for wave 2, and wave 3 here and wave 4 here that's pulled back 61.8% rather than 38.2%. So there's a lot of things wrong with this. So technically this would be the best fit for it. Yeah, but like I mentioned, if the market moves above that 61.8% here, say if it finds support on 64.50, well then you can look to go long from that point. So it would be long above that point there. If we turn into some sort of bullish market, you know, on the Friday or something. Alrighty, I'll have to leave it at that. Thanks for tuning in. Cheers.